I'm going to say something that might sound controversial, and this will be my prediction for Toronto's real estate in 2026. In my opinion, 2026 could be the year that Toronto real estate starts to feel normal again. Not a boom, not a frenzy, but a shift from fear to stability to gradual momentum. And it is not because of the vibe, it's because of the plumbing underneath the market right now, supply, affordability, and interest rate psychology. So I'm gonna walk you through this. The market is not dead, it is waiting. In my opinion, one of the most important ideas I get from buyers and sellers right now, and also the sales reports that we get from Toronto real estate report, is that sales are low, not because of affordability, but because of the confidence got hit. And here's what's interesting: both the TRREB market data and the Urbanation report, which I covered in my previous videos, describe a world where affordability has improved. Urbanation's November report told us that the mortgage affordability has improved about 30% over the past 2 years to its best level in 4 years, and that sales should be substantially higher given the pent-up demand. Also, the TRREB's data and our mortgage affordability data points to affordability improving upwards of 30%, and that mortgage cost versus rent has tightened to within about $200 range. So the ingredients are there. What's missing is confidence, and confidence tends to return when people stop believing prices will keep falling forever. In my opinion, supply is the biggest story in 2026. If you're following me, you already know this. Toronto just lived through a massive condo completion wave. About 60,000 completions came to the market over 2024 and 2025, but then the pipeline drops hard in the coming years. In 2026, we are going to have about approximately 20,000 completions. 2027, we're going to have about 15,000 completions. 2028, we are going to have about 13,000 completions, and 2029 and 2030 basically something closer to zero. That's not forecasting. This is the pipeline reality because of the lag between sales and the deliveries. So what does that mean for 2026? It means that 2026 is the transition year. Still some supply coming, but the flood stops and the psychology starts to change. That's exactly how bottoms form. Not with perfect news, but with less bad news and tightening supply. So of course, 2026 might be a little bit messy, or might start a little bit messy. And I think we shouldn't sugarcoat it. There is still inventory to work through it. As I mentioned in my previous video, we have 9,000 unsold pre-construction inventory. We have 10,000 unsold units under construction that is going to be delivered in the next 2-3 years. We have just under 3,000 completed and unsold units, and the resale market has somewhere between 8,000 to 9,000 listings. Meaning if those under construction units don't clear, resale competition could effectively double. Plus, condos closing defaults, from what we have seen in the market and we have talked to the developers, it is going to be estimated around 15%, which is a large number. So 2026 probably isn't a straight line up. It's more likely, in my opinion, it's going to have a first half that is going to be choppy and messy, and the second half is that where the momentum improves as supply comes down and the buyers realize that the world didn't end. Now let's connect the macroeconomics. Bank of Canada held rate 2.25% overnight lending rate. It was decided on December 10th that they're going to pause the rate cuts, and they held. And the CPI was also 2.2% in November. And again, major banks are pointing to a pause type environment into 2026. So that means that we are not going to see a huge cut. So if the rates are stable-ish, supply is tightening, and affordability has improved, that's a setup where the demand can basically gradually return to the market. It's not going to happen at once, but in my opinion, it will happen gradually but steadily. The Urbanation report points out something very specific. Entry-level demand is rising very fast, like condos under $500,000 and houses under the key thresholds like $1 million, because the buyers are taking advantages of those prices that has not been seen in 4 years. Activity is surging under $500,000, and it's the first step to restarting the whole engine, real estate engine. That's how recoveries begin. First, the value segment heats up, then the move-up demand follows, and then the sellers regain confidence, and then the momentum spreads. So my 2026 view is not a boom type of recovery. My 2026 view is stabilization, going to bottoming, going to gradual improvement. Hopefully, let's see what will happen. So let's recap. This is my 2026 prediction. I'm going to be careful with that word, of course. Let's call it an outlook. In my my opinion, this year, 2026, could be a turning point here because supply is normalizing down, affordability has improved, and the rates appear to be in a holding pattern, meaning the market doesn't have to fight a new wave of tightening. But it won't be perfect. There's still inventory to clear and confidence to rebuild. Now tell me, what's your prediction about 2026? Let me know in the comments down below, and make sure to subscribe to my channel. If this video brought any value to you, please share it with your friends and hit the like button.